How do we avoid the widow's tax trap? Welcome back to our series on taxes in retirement, y'all. And if you don't know what the widow or widower's tax trap is, that is basically when, if you are married, one spouse passes away, and now your taxes almost basically double because instead of a married filing tax payer, you are now a single taxpayer. And the income might be the same, but the taxes are going to be higher. And so, what we're going to talk about right now is how to avoid that trap. I'm going to go through a couple options to avoid the widow or widower's tax trap, and then stick around for the end where I can talk about what some of the next steps you can take to make sure that you are not a victim of this trap. So, if you are married, if you're not in a high tax bracket now, the spouse that outlives you might be if good tax planning is not done. I interviewed Cameron Huddleston on my podcast not too long ago, and she's an author of a lot of different articles, but GoBankingRates.com is one of them. And she asked me to contribute to her article, A Month by Month Guide for Your 2021 Financial Check-ins. And in March, she quotes me on taxes. It reiterates the importance of making sure that you have some type of good tax planning done as soon as possible, especially if you're planning on inheriting any kinds of assets. So an example of what good tax planning can do for you. If you have a good amount of your money in tax deferred assets, IRAs, 401ks, 403bs, and the like, let's say you've got $500,000 and you're in your mid 60s. Okay. One of the options that you have to that could make sense to avoid that widow or widower's tax trap would be to convert a portion of that to as good of a big of a portion as you can that makes sense for your tax brackets over time. You don't want to do it all in one year, most likely. You want to do it over time, right? And because if no tax planning is done, and say that grows to $750,000 when you're in your mid to late 80s, and then one of you passes, the required minimum distribution amount, that amount that you have to take out every single year, whether you need it or not, and you're going to be taxed on it, that amount doesn't change. That amount is still going to be high because now if you're a little bit younger, it might change a little bit, if you're younger than your other spouse that passed away, but you're still going to have to take that on that large amount. And now you're a single taxpayer. So you're going to pay more tax on that amount that you have to take out. Also, we don't know what taxes could be 10, 20, 30 years from now either. It's like they could go up, they could go down. And which way do you think they're going to go? Yeah, especially with all the stimulus packages that have happened here lately. Most likely they're going to go up. So another option could be if you have a lot in taxable accounts and you're maybe young enough and in good enough health, index universal life insurance could make sense for you as well. You can still get access to the cash value. And if done properly, you could take distributions of it in retirement tax-free. So that would work out as well. The life insurance companies understand risk transfer. And so basically, like to sum up all the different options that you could do, if you want to avoid the widow's tax trap or widower's tax trap, you have to know what your tax map in retirement is really going to look like. There's different times that you could be taxed differently on the income that comes in. And what does that look like throughout your journey in retirement? And so at least we know what the current tax laws are and what we can do based off of those. And that way, when the best time to make these tax moves could be when you look at that tax map. So if you also want, we can even coordinate with your CPA. So next step, get a retirement tax analysis. That will allow you to make the best tax moves so that you can end up with more and the IRS end up with less. And so schedule a call with the calendar link that's going to be in the description here. Next week, we're going to be going over why we can sometimes do more from a tax standpoint in retirement than we could while someone was still working during their full-time career. As always, guys, if you want more confidence in your retirement, our contact information, our calendar link is going to be in the description. So don't forget to smash the subscribe button, hit that notification bell so that you can be notified every single week when we get new content going on. We also have another YouTube channel for our podcast called Retirement Rescue Radio, where we also dive into a lot of topics very deeply. We do that long format, sometimes half an hour to an hour is what some of these can be. And so once again, guys, appreciate you sticking around here. Join us next week, same time, for some more content to give you the information that you need to empower you to live the retirement that you deserve. Take care.